So welcome everyone to our second video. It's been almost a month since our last video. I've been busy with my New Year celebration with my family, and now we're back. It's time to face the reality, and we'll be going through some stocks here, some company. A lot of things happened within the previous month, and we're actually going into February with a lot of first quarter earnings coming on. And yeah, so let's jump into it. In my previous, which is the first video, I talk about buying Bitcoin, and eventually it was unfortunate we got stopped out. Got stopped out immediately, and the price went up without us. I was planning to buy restock my Bitcoin over this area. However, it's just I'm putting my funds into the other two, which interests me more, the two companies. So we'll be going to that in shortly, but we're gonna talk about the recent big news, which is DeepSeek. And once China announces DeepSeek, what it can do, what is the source, how much money that it takes to build a model, it's incredible that it's cheaper to build a more complex model as compared to any models or any mechanism that the big companies using, the Meta, Google. Yeah, so let's look at the NVIDIA. I have this stock. Okay, I will be pasting my current positions, and that positions is based on 30 of January. Well, it's actually 31. Well, it's actually 1 almost 2 a.m. in the morning. So yeah. So when the news came out, semiconductor sector, AI sector company drop huge, tremendously, very crazy, and yeah, get this gap. Google. And for Google, well, while I'm still here, let's talk about some Google. I'm looking forward to buy it. However, this level of consolidations, or we can say this is actually flag pattern. Um, I'm waiting for a breakout. It's either two ways. It's either I buy at the highs. This is something that I wouldn't want because it's really not that interesting. So it doesn't attract me the most. However, if it breaks down to the bottom, well, I'll see you at the perhaps like the 200 level. Yeah, perhaps at the 200 level, like over here. Yeah, waiting for it to fill the gap. So moving on to the reason stocks. Okay, reason company that have add on to my portfolio. So first is gonna be ASML. Alright, I bought the ASML during the because of the DeepSeek news, and I managed to catch it like 6 to 7, yeah, over here at the lowest. It's very very good, and the earnings are great. So we expecting to see a long positions on the ASML. Pretty good trade it is one. I'll be holding it as well because if we scroll back overall, wow, ASML is a good company. And the reason why I said is a good company will be based on some of the factors that I mentioned on the first video. So yeah, we will be looking on the facts about ASML, why I'm thinking about buying it and holding it long term, and perhaps waiting it to go above and retest its high again, like $1,000. Yeah. And the second one is going to be our MO. So this, as mentioned in my previous video, I said that the revenue is decreasing. However, to specifically, the macro trends actually show the value which is in the range of wide range. So it will actually look like it actually have a huge drop. But if you scale it, rescale it to 0 to however whatever million it is, it will be seen like as if it's just have slight reduce instead of like huge reduce. I will say it has consistent revenue. It's pretty good. I managed to buy it. Alright. So today market open and we have great earnings. Beat the earnings, pretty good. In the pre-market actually drops while post-market drops yesterday. So one reason behind this might be because of higher expectation. I mean, they do beat the revenue, the earnings. However, the holders, the shareholders, are expecting more than this. So I actually treat this as kind of a overreaction. Plus, the price was actually hovering about 50 something, and then my plan was that, hey, the trend is great. Okay, the trend is great. We have a great green earnings, revenues, and I'm waiting for it to retest the 200. So suppose I have to place a buy limit on whatever here. So when it just came down, sweep this area, I will be able to buy it or enter some. Yeah, when I came back, I missed the lows, but yeah. Anyways, I being able to purchase it at 50-ish, $50.88. Yeah, that's really decent. And yeah, we'll see. I'm actually looking for its dividend because, as we all know, very high dividend. All right, so moving on. Let's us look at gold. So for gold, we have several news. We have the FOMC, which concludes that the Fed won't be cutting rates. They will be hold. Well, they don't say they will not be cutting rates, but they said Powell says there's no rush to deal with the situation. So yeah, a hold of the rates is more likely. And plus, for today's GDP is way lower than expectation. So I remember expectation is 2.7%, and the actual it's Friday already. Wow, it's already so late. Yeah, I might have to do the video in 2 separate days. Alright. So as we can see from this news, the Fed's gonna maintain their rate, and as of today, we have a GDP. So yeah, really drove GPT 2.37% forecast, and the actual of minus 0.4%. That is something. So gold is up. Am I looking to buy it? Well, yes I am. Right, I'll be looking for to buy, waiting it to break this area with strong bar and retest. However, I really don't like buying at highs, even though it does retest after the highs, because the retests at the highs somewhat are very weak, because those support aren't actually legit support. But however, sometimes when things are starting to get bullish, the economics are really great, it's very bullish bias towards that certain field. Yeah, that support is gonna be valid. For example, right? For example, okay, I have my losing trade SLG. So for example, according to this, if you look carefully, right? See, during this time, the Fed's cutting rate. So for properties, it's more favored towards property because of rate cuts. So over here we can see, even though it creates a new high, well, it's not a new high, but at least for the year, okay, we have create new highs, and for most of the time, this kind of support, I don't trade them because it really is weak. I prefer to buy at a safer level. I have to have a higher safety margin at maybe 150 MA and the 200, so you get more discount on it. But however, during this kind of a situation, the stock is actually being favored. So this kind of retracement is decent. It's really cheap at that moment because people are actually wanting to buy all of this. So things goes up. Bitcoin, for example. Yeah, look at this. Right? Create all-time highs. Retesting this small support. I don't think I will ever buy at this area because who will be buying at this area? If you don't want to look at price action of here, even though with the engulfing, I mean, yeah, this I won't be buying it, even though I might lost the opportunity to earn a lot. But no, this is my perspective because it's really strange to have things on top of their all-time highs, even though it does retrace back. It doesn't make sense. All right, if it retrace back to like, oh wow, this area, or like touching the 150 or the 200, then I'm probably buying it. But I have to make sure the fundamentals are great, are bullish, are strong in health in financial health. So moving on, we'll be discussing why I chose ASML as well as the MooMoo. All right, so over here we have the overall metrics that I will be analyze to see whether or not I would like to buy and own the company. So as mentioned before, we will be looking at some of the most important one: the revenues, the income, the ROE, ROIC, the free cash flow, the debt, all that kind of stuff. We'll be looking through that. So as for as mentioned, okay, here's the difference. All right. So if you rescale it, see, throughout the 4 years, it is reducing. However, we can see that the revenue actually floating around 22 to 26K in $1 million of revenue. So it's like consolidating. It's a really stable and consistent revenue for MooMoo. Alright, so my ASMR just came out. We'll be looking at that later on. And our net income for the recent 5 year, we can see an increasing from 2019 to 2023. So 2024 we haven't concluded yet, so I might as well refresh the analysis. But yeah, you can see there is a clear trend of up for net income. So MooMoo is actually really attract my attention. And as for the free cash flow, I can see a clear uptrend. That's all I really want. As for that really surpassed the free cash flow. All right, at the moment, the company won't be able to have really stable or have a really high margin of safety. That's the thing. But consider that the debt is actually decreasing. It's actually a good thing for the company. So the dividend that they pay undoubtedly is going to be increasing. It's one of the most famous stocks in terms of dividend yield. And yeah, it's top percentage, it's very high, around like floating around 6 to 9% of dividend yield. It's crazy high. And for the research and development, okay, I don't have any. As for the ROIC, we can see a really high surge during 2019 and kind of go back down in 2020. But we can see the ROIC hovering between lowest being the 14%, yeah, with the highest being 18%, but we're not going to calculate that. This is actually considered as a outliers, which actually doesn't contribute anything, I would say. And the recent 4 years, the ROIC is actually increasing, so it's really high, really good. The ROE as well, I shouldn't say more. So all the factors increasing revenue, I would say yes. I mean, the revenue is stable. A company like this being able to maintain its revenue is great. Net income, there are some downsides from 2016 to 2019. However, it's able to grow back up during the years. So really strong. I'm wanting to see it go back to its track and be great again. Free cash flow, increasing free cash flow, loving it. High total debt, but we're getting through it with decreasing debt, and it's not really much of our concern. But of course, if the free cash flow is greater than the debt, it's always a +1 for the stock. Increasing dividend, this is an extra information, but it's always good to have extra dividend being paid. Yeah. So overall, yeah, MooMoo is a decent company that I'm willing to own. Plus, we just beat the recent earning. I'm buying at the lows, touching the 200 MA. I will see if it managed to retest the highs that is recently, the swing high that it recently just made. So as for ASML has been one of the strong company. Okay, I would say unique company, because the machine that they have to create chips, the technology that they have, are not yet being able to replicate by other company. So I would say ASML is one of those company that has special technology to create microchips, and they sell a lot of machines all the time. So the revenue exponential, pretty decent. We have the net income in exponential form, pretty decent as well. Free cash flow, some problem with the free cash flow, increasing free cash flow from the year 2009 to 2021, having a decrease in the recent 3 years. So that's going to be one of the concern. However, I do understand that sometimes the free cash flow they have decreases due to the demand of having to supply more machines, and these kind of machines will take millions, hundred millions of dollars to build. And yeah, as for total debt, this is the reason why I like ASML, because for the free cash flow is always higher free cash flow than debt, higher free cash flow than debt. Only last year, the year before actually, is 2025. So it's slightly lower, however, we still managed to cover it. And plus, the debt doesn't actually go surge higher. It just maintaining a stable rate. It's really decent. And we can see the research and development is increasing, indicating that ASML is actually putting more efforts into research and development, in which they explore more and keep advancing their technology or the machine to create more advanced chips. So the ROIC is increasing, very good, stable, 32% ROIC, very nice, and ROE is really good as well. So overall, ASML, the matrices that it provide, the criteria that we look at, all are good, decent, and that is why I bought ASML. Hearing the dips due to the news of the DeepSeek. So they say, yeah, DeepSeek is from China. So it's a China artificial intelligence company based off Hangzhou. Oh, founded in 2023 by Liang Wenfeng. So in January 2025, DeepSeek released its AI assistant utilizing the V3 model as a chatbot app for iOS and Android platform. And by 2027, the app has surpassed ChatGPT as the highest rated free app on the US iOS App Store. Benchmark tests indicated the DeepSeek chatbot could answer questions, solve logic problems, and write computer programs on par with other leading chatbots. Wow, from Wikipedia. And a notable aspects of was cost effective and that's what I'm talking about. So well, all of this doesn't actually contribute to bad news. When DeepSeek came out, the market drops like crazy. It's not crazy actually, but yeah, it gaps down. That's crazy for most people. Most people think when there is something new, such as DeepSeek, which kind of like having a better performance, like cost effectiveness, which strengthen most of the big US AI company. So people will be thinking like, oh wow, we're having a trouble, we're having a meltdown. AI stock is doomed. We're gonna be replaced by DeepSeek. People are scared. But DeepSeek, the idea of DeepSeek, they being able to surpass ChatGPT is due to the cost effectiveness. So they say, while leading AI company train their trainbots using supercomputers with as many as 16,000 GPUs, claim that DeepSeek claimed that they need only 2,000. That's like 8 times lesser. All right, it's crazy. Okay, people are thinking, oh my god, this is crazy. They just use less source resources than we do. All right, we're doomed. Our AI sector is gonna be replaced by China. China is gonna be the boss, the head of the AI. Well, partially that's gonna be true. However, what I'm thinking is that if this kind of achievements are possible, and it's actually being done already, it wouldn't be the end of the US market or for the AI sector, because due to this technology and the ability of being able to use less resources to train a more complex model is gonna push small caps, small company, to have their own AI model. So usually, based on what they said, if training a supercomputer requires a huge amount of resources, tens of thousands of GPUs, small caps don't have that ability to do so. Okay, only big cap company, Meta, Google, billion trillions company, only they have the resource to do such things. So with this technology or the strategies of being able to train models with lesser resources, it's going to benefit a lot of company. A lot. I mean, 2,000 GPUs is 8 times lesser, cheaper. So I think DeepSeek appears as a short-term bad news, which is big, and somehow the market's gonna say, hey, it's crazy, but we're gonna start moving up. Alright? Well, I actually do see that DeepSeek appears to be sort of like a manipulation for some stock. I mean, hey, bad news came out. Well, it's not bad actually, it just scares a lot of people, saying, hey, people can use lesser resources to do as great things that are as greater than we do, such as ChatGPT. So it's crazy. People scared. they don't know whether or not DeepSeek is gonna completely replace us with that, which that will actually be sort of impossible. We're talking facts over here. That's just, that may take years. I mean, Meta, Google, those are great company. So I do think that DeepSeeks appear as a slightly bad news, but good news, because it makes a deep wish I being able for me to buy the AS by the lows. So I have trouble with my recording. I recorded the second part of this video, and it turns out the volume is not being recorded. However, I'm just going to summarize everything, which is the analysis that I provided in this video. It's actually something that I've been working on to enable me to have a better visualizations on the matrices. So I wouldn't have to spend a lot of time just clicking through certain websites to check on the information such as the revenue, the income, the free cash flow. So I can just use the thing that I just created and just type in the symbol of the tickers or the company, and then it will just give me the summary or just show me the overall performance for revenue, income, and etc. So this is something that I've been working on, and I'm willing to share once I done with all the debugging and then make sure that most of the thing works well. So, and I just want to thank you all for watching this video, and my first video has over 10 views. It's very surprising because I started off this first video and the expectation of mine is that there's just gonna be 1 to 5 viewers. However, 10 is really a lot for me right now, so really appreciate the time that you guys spend to enjoy the content. And I just want to say, if you really found that this is something that useful to you and you find it interesting, well, there will be more contents in the future. And yeah, so just please subscribe the channels. I will try my best to create more content as well as more meaningful information for all the traders. So that is all for this video. I'm really sorry about the second part of this video. I tried to re-record it, but it's just that I really want to publish this video as soon as possible because I have other plans to do. So, well, the second part is basically what I'm just talk about, and yep, that's all about this video, and we will see you on the next one. Goodbye.